Then friends, section 196 I am discussing here. The point is, in case if the payments are made to the government or Reserve Bank or certain other corporations, such payments does not attract the TDS. If interest is or other sums are payable to the government or RBI or certain other corporations, mutual funds, then it will not get attracted to the provisions of the TDS. Make a side heading. Section 196, section 196. No TDS on interest or other sums. No TDS on interest or other sums payable to government, comma Reserve Bank, comma corporations, comma mutual funds. Corporations means specifically corporations established by the central government, central acts, or under any law for the time being in force. Then I move to section 196B, TDS on income from units. See friends, no TDS shall be deducted on long-term capital gains by transfer of units, because that is being exempted under 10 clause 38. But if you are getting any income from the units, then it will get attracted to what is it, 10% of TDS. So where any income by long-term capital gain arising from transfer of units referred to in section 115AB is payable to an offshore fund, because for the offshore funds and all your 115AB comes into play, then it will get attracted to what is it, 10% of the TDS, but not to the what is it on a transfer of units. If exemption is there under section 10 clause 38, once income is getting exempted, the TDS aspect does not come into the play, but other way around, that is your 196B says that in case if section 115AB comes into play, then such a thing arising to the offshore payable to an offshore fund will be getting attracted to the provisions of section 196B. So write down, no TDS under section 196B, no TDS under section 196B shall be deducted on long-term capital gains exempted under 10 clause 38, exempted under section 10 clause 38. Then friends, that is rate of tax under section 190, rate of TDS under section 196B is 10%, is 10%. Then income covered by 196B is long-term capital gains, arising from transfer of units, referred in section 115AB, referred in section 115AB. Then friends, I move to 196C, TDS on income from foreign currency bonds or shares of an Indian company. Of course, where you are getting a dividend income, and if that dividend income is getting exempted under 10 clause 38, then no TDS. But other way around, in case if that income is the one which is covered by section 115 AC, then TDS rate is at the rate of 10%. Of course, keeping the time factor, we are not writing it. 196D, TDS on income of foreign institutional investors, if that is being covered under section 115 AD, and what the income that you are getting is a capital gains, then it will not get attracted to the provisions of section 196D. Other way around, interest income, if you are getting on interest income of foreign institutional investors from the securities, will get attracted to the provisions of 196D, and the TDS to be deducted is at the rate of 20% is a point. But in case if those things are being transferred and you are getting capital gains, then such a capital gain income will not be subjected to the deduction of a TDS is a point to be remembered. Even if the dividend income comes, and if the dividend income is getting exempted under 10 clause 38 because 10 clause 34 because dividend distribution tax is being paid on it, then no TDS. Then certificate for deduction at a lower rate. That is, let us suppose the SSE feels that he should get tax deducted at a source less than at the rate prescribed in the law. For whatever the reason, he has to make an application, and then considering the genuineness of it, what they will do is they are going to allow it to happen, and they will issue a certificate. But will the assessing officer can do so that is on his own without consulting his higher ups? What the law says is, certificate for lower deduction or non-deduction of tax at source, necessarily approval is required before issuing such a certificate is a point. Of course, whose approval is required? That is approval of the Commissioner of Income Tax is required, and in case if the amount is exceeding 50 lakhs in Delhi metros and 10 lakhs in other stations, and information should also be passed to the DIT. See Chief Commissioner of Income Tax TDS gives the administrative approval, and jurisdictional Commissioner of Income Tax should also be intimated is a point. So this is one important thing you have to make a note, that is write down. For issuing a certificate for lower deduction or non-deduction of tax at source, assessing officer required to take approval of Commissioner (TDS) and the fact should be intimated to jurisdictional commissioner. And this requirement under section 197 is applicable if the amount of the tax exceeds 50 lakhs in Delhi in metros, 50 lakhs in metros, and Hyderabad, Ahmedabad and Pune, and amount of the tax exceeds 10 lakhs, amount of the tax exceeds 10 lakhs in other cities. Then friends, section 197A discusses about no deduction to be made in certain cases. Of course, basically where you don't require to deduct the tax at the source is if it is below the threshold limit or such income is getting exempted by any of the provisions is a point, then there is no question of a deduction of the tax at source. Of course, for that you need to make an application and which is required to be considered. But for senior citizens, what they said is simple declaration if they give that they are not subjected to the tax, then taking that declaration there is no need for deducting the tax at a source. But other way around, for the remaining people they require to make an application and it need to get approved and all that. But 197A1B, it gives relaxation to the senior citizen. That relaxation point you just make note. That is, if an individual is a senior citizen, he can give a self-declaration, that his tax on estimated income shall be nil, and in such case TDS shall not be deducted. See friends, that is a income payable net of tax. You have to deduct the tax at source and remit the balance to the payee. But when it comes to the point of the payee, he has to take what he received plus what is the TDS. Total it becomes the income of the SSC. Out of his income only we are deducting the TDS. So what he received plus what is the TDS becomes his income is a point. When amount is paid net of tax, TDS has to be calculated by grossing up of the amount, since the tax itself represents the income of the payee. Whereas in another situation we have, in case of salaried class employees, if tax is paid by the employer on their non-monetary benefits, then what will happen? His income will be salary plus taxable non-monetary emoluments plus tax paid thereon, because there the employer is undertaking to pay the tax on the non-monetary benefits, so that also becomes a part of his income. However, there is an exemption under 1010cc that tax paid on non-monetary benefits gets exempted is the point. Only thing is, employer, there is a difficulty because section 40, somewhere we have studied that once the tax is paid on non-monetary benefits of the employee, then such amount of the tax will not be allowed or it gets disallowed. 205, section 199, credit for the tax deducted. Yes, on ultimate tax payable, what you are going to give the deduction, TDS, advance tax, then self-assessment tax which you paid. Still some more is payable, then the demand notice comes into the play. So what the TDS that is being deducted will be reduced from the tax payable on the income, is the point. Now the issues here is like, that is if somebody deducted the tax at source and they have not remitted the same to the government, then is it we should penalize the person against whose income TDS is being deducted by asking him, since your deductor failed to pay, you pay the tax and do it? No. As long as he brings a proof that tax is being deducted at source, he can very well get the claim. Of course, theoretically yes, practically there are many issues behind it. Even when TDS is being deducted and remitted to the government, if properly the e-filing of the TDS returns is not being made, then if that is not being reflected in 26 AS, then I am being forced to and asked to pay because demand notice is coming. Then friends, bar against direct demand on the SSC, you can't, just now what we have discussed is that only where the tax deductible at source under the foregoing provisions of this chapter, the SC shall not be called upon to pay the tax himself to the extent to which the tax has been deducted against that income. So if there is a failure on the part of the deductor, the payee should not be troubled. Bolke, there is a bar they have kept against direct demand on the SSC is a point. Then 203A, tax deducted and collection account number. See, the deductors need to make an application for TAN number, tax deduction and a collection account number, and they have to invariably quote that particular TAN number in the challans, returns and all that. Failure on their part will get attracted to the penal provisions. It goes to the 10,000 rupees and all. So but tax deduction and collection account number is being discussed by section 203A, and it is stated that one has to apply for that particular TAN number and must quote the TAN number on all challans, certificates and periodical statements that they give and the returns that they deliver and the TDS certificates that they give, on all that you should invariably quote the TAN number is a point, friends. See, what are the duties of the person who is deducting the tax at source? Section 200 discusses on this point. First thing is, one has to deduct the tax at source, and having deducted the tax at source, he must make the payment of the tax deducted at source within the prescribed time. Of course, we will discuss the time period also, but obligations, what are the obligations under the TDS? On the deductor, he has to remit the same within the prescribed time. Then payment of tax borne by the employer on non-monetary perquisites within the prescribed time. In case if the employer undertakes to pay the tax on non-monetary benefits, that also is to be paid within the prescribed time only. He has to file the TDS returns within the prescribed time. These are the obligations kept on the deductors. Then what are the time limits for the payment of the tax? Probably when we prepare so much for the TDS, questions may come on the time limits. So this is one area you should be very, very careful. That is, where payer happens to be the government, or when the payment is made on behalf of the government, then TDS is deposited without challan, then on the same day you have to remit the same to the government. And TDS is deposited with challan, then what is it, time limit is what? On or before 7 days from the end of the month in which the deduction is made or the income tax is due under section 192 1A. that is a tax on non-monetary benefits. But in the examination, questions come not on the government payments, other than government payments only that much if you remember, that is enough. When tax is deducted by person other than government hai to, then if it is income or the amount is credited or paid in the month of the March, then the time is given to make the payment till 30th April. But in respect of any other month, when TDS is a tax is deducted at source, then on or before 7 days from the end of the month in which the deduction is being made. Every month, this month by 31st March, whatever you created or paid, in respect of that amount, TDS is to be deducted and should be remitted to the government by 7th of the next month. Whereas for the month of March, what the TDS you have deducted, till April 30th, the time is there. Please make note. Time limit for payment of the tax. Time limit for payment of the tax. What is it, friends? In respect of the income or the amount, in respect of the income or the amount is credited to or paid in the month of March, paid in the month of March, then payment must be made, on or before 30th April, on or before 30th April. Then in any other case, next point, in any other case, TDS is to be paid, within 7 days, from the end of the month in which, the deduction is made. Friends, with respect to the service tax, it is a quarterly payment, half yearly return. Whereas with respect to the TDS, what is it, friends? Monthly payment, quarterly return. All of you are able to get my point? Service tax में क्या है? Quarterly payment, half yearly return. TDS में क्या है? Monthly payment, quarterly return. So 206A, furnishing of a quarterly returns in respect of the payment of interest to the residents without deduction of tax. Of course, this is another aspect. What is it, friends? Banks, when 15H, 15G is given and when interest is less than 5,000, then they don't need to deduct the tax at source. But in respect of those SSEs for whom TDS is not deducted, with the particulars of the incomes and their names and PAN numbers, quarterly a return is to be filed is another important point. So whenever you go to the bank audits, not only check for what is it, TDS return is a file in respect of the TDS made, even you have to equally check whether where without deducting the tax at source, when the interest is paid, with respect to that, quarterly information is getting furnished to the department or not, by way of filing a return is the one which you kindly ensure, because that also amounts to non-compliance with the statutory requirement. But other way around, what is the time limits for furnishing the quarterly returns? 30th June का return कब तक? 15th July तक. 30th सितंबर का रिटर्न कब तक? 15th अक्टूबर तक. 31st जनवरी का what is it? 31st December, what is the due date? That is 15th January. Of course, for the government, 15 days more time is there. If the deductor happens to be the government, then 1 month from the end of the quarter. Whereas other than government, if the deductor happens to be other than government, within 15 days. But last quarter, 31st March quarter, the time is there till 15th May, is the point. Write down. Quarterly returns of TDS, quarterly returns of TDS are to be made within 15 days from the end of the quarter. Within 15 days from the end of the quarter, except March quarter TDS return is allowed to be filed till 15th May of the financial year. 15th May of the financial year, immediately following the financial year in which deduction is made. See, TDS certificate is to be given to the payee. In case of salary, TDS certificate will be given in form 16. Other than salary, the TDS form number is what? 16A. Write down. TDS certificate is to be issued salary form 16, other than salary form 16A. Of course, periodicity with which it is to be given, friends. In case of the salaries, once in a year, if it is given annually, you will be giving, and that too also 31st May tak de dena. Whereas other than salary, every quarter you have to give the certificate, and within 1 month from the end of the quarter, or within 15 days from the due date for filing the quarterly return, you should give the certificates. So write down, that is a TDS certificate for salary hyphen 31st May, annually once. TDS on non-salary, that is 1 month from the end of the quarter, except for March quarter up to 30th May. March quarter up to 30th May. Then friends, we have the next session for about 1 hour, where we will discuss certain procedural aspects involved in the TDS, and I will also take you with the penal provisions with respect to the TDS, and we will also discuss the tax collection at source. Then the last leg of it is the problem section. Thank you.